Okay, doji candle is not a self-confining candle. You know, that's indecision. So it's not confirmation. So it's not a self-confining candle. You call another one again, hammer candle. Probably, you know, also, but bullish and bearish engulfing, they are self-confining candles because they already tell you the direction of the market has changed. So that's just as powerful as bullish and bearish engulfing is. You can see them.
Okay, I was thinking is like a single candlestick. I don't know that I can also use.
No, you can not just singles. You can use dual. You can use triple.
Okay. I was thinking it's just single candlestick.
No, you can use dual. You can use triple. You can use them, all of them.
Okay.
So it's not just single. So what about from triple candlestick pattern? Triple. Morning and evening star. Okay.
Yes, sir.
Okay.
Yeah.
Make sure to wait until the candlestick closes and fully form before acting on the candlestick pattern. Always wait for the right confirmation that the price is moving in your direction before you enter the trade. For example, if you see a tweezer bottom, it is more prudent to wait and make sure that the candlestick after the tweezer bottom candle pattern closes higher before going long. Because tweezer bottom is not a self-confining candle. So you need another candlestick to close to not decide that the market is going to, if it's going to buy or not. So do you get that, sir?
Yes, sir. But this tweezer bottom, tweezer bottom is a double candlestick.
Yes. Okay, same. Yeah. Tweezer bottom should have the same lows. Tweezer top should have the same highs, something like that. Yeah, yes, tweezer bottom same lows. Tweezer top same highs. So that's how it is. Okay, it's here. It's here on 30 minutes time frame. I've seen it already. I think the market buys from there. And it's coming from the support. Can you see my screen now? This is the candle I'm talking about. Tweezer bottom should have the same lows. Are you seeing that now? Yeah. So that's it.
The same low. Okay.
Yeah.
Okay.
So that's tweezer bottom.
Even if it's I was thinking like that first one should be bearish and the second one should be bullish before I can use it.
I love the way you ask. I love the way you ask your questions. It's very good because that was the same thing I also thought when I saw it. But when I read the law, again, it said tweezer bottom should have the same lows, which means they don't care about the highs
or the color of
the they don't. Since it has the same, that means the price came down here. It has the same shadow lows right there, like this now.
Everything looks the same.
The same, yeah. So that's the identical that happened right there. And then the price started going up from there. Going up from there, yeah. Summary of Japanese candle. Let's do a summary of it. Look at it. What we talked about so far. Spinning tops, dojis, inverted hammer, hanging man, shooting star, bearish and bullish engulfing, tweezer top and bottom, morning and evening star, 3 white, 3 inside up and 3 inside down candlestick pattern. How to trade the head and shoulder pattern. The head and shoulder pattern is a reversal pattern that is most often seen in an uptrend. Not only is head and shoulder known for trend reversal, but also known for down drops reversal as well. In this lesson, we'll stick to taking what we've learned, we'll stick to talking about trend reversals and leave topic of down drops for another time. Now, head and shoulder. A head and shoulder pattern is also a trend reversal formation. It's formed by a peak, shoulder, followed by a higher peak, which is the head, and another peak that equals the first peak, which is the other shoulder. A neckline is drawn by connecting the lowest point of the throat together. So the lowest point connected together. The slope of this line can either be up or down. So it can be sloping down like this, or it can be sloping up. They now said typically when the line is sloping down like this, it produces a more reliable signal for a sell. Why did they say so?
When it's sloping down?
Yes. It produces a more reliable signal for a sell. Why did they say so? Because it's downtrend. Thank you.
Like is the
trend as market has changed. The trend has changed character from here to here. We are not coming down, right? We are not bearish. So that is why it looks typically when it's sloping down, it produces a more reliable signal. So that's just how it works. Now, With the example, this example, we can easily see that a head and shoulder pattern is formed. The head is the second peak, which is the highest point of the pattern. The two shoulders also form peaks, but could not exceed the height of the head. In this formation, we put an entry order below the neckline. So we'll calculate a target by measuring the high point of the head to the neck. The distance is approximately how far price will move when it breaks out. So you can use that to set your profit target. So the high point from the head to the neck, that's what market will do when it breaks out to the downside. You can use that to set your what? Profit target. Do you get that, sir?
Okay. Yes, sir.
So you can see that once the price goes below the neckline, it makes a move that's at least the same size of the distance from the head to the neck. We know you are thinking to yourself, the price kept moving even after I reached the target. Our response is, don't be greedy. Take your profit. Even if you don't reach, take your profit, because you don't know what's going to happen next once you already make that target. So do you get that, sir?
Yes, sir.
Inverse head and shoulder. I'm not going to read that. Inverse head and shoulder is at the bottom, right? See this one in a downtrend. It followed by a valley,
Yes.
goes up, comes down, form a lower valley that's lower than the first valley, and then another valley that equals the first valley in a downtrend. That's head and shoulder. And then when the market breaks the neckline, it makes a move all the way up. That's the distance from the head to the neck. That's how far the price will break when it breaks out. So that's it on head and shoulder and inverse head and shoulder. I don't know where I can find one. You can see we have a shoulder right there, right? Neckline, head, neckline again, right? Another shoulder right there. But the market did not sell, right? It continued going up and start buying. So that's one thing to wait. Wait for the price to do what? Break the neckline before you sell. Where is the neckline? This is the neckline right there. So if price does not break that neckline, you can't sell because you don't know if it's going to continue buying or not.
Okay.
So in this case now, the market did not sell, continue buying. So imagine you took a sell from here, market would have stopped you out before any other thing. Are you getting it?
Yes, sir. Okay, there is a particular tool for drawing it.
Yeah, of course, there's a tool for it.
What is the name of that tool, please?
Head and shoulder.
Okay.
So here we have another one, inverse head and shoulder. So this is shoulder, right? Neckline, head, neckline, shoulder. So you can see when the price breaks out, right? It makes a move all the way up. Now you can calculate the distance of the movement from the bottom right here all the way up here. That's how far price moved. So measure it, put it on top and see where price goes. It's not the same measurement, right? Before it reverse.
Yes.
So that's it on head and shoulder and inverse head and shoulder. So do you understand head and shoulder, sir?
Yes, sir.
How to trade wedge, rising and falling wedge. In a wedge chart pattern, two trend lines converge. It means that the magnitude of the price movement is within the wedge pattern is decreasing. Wedge signal a pause in the current trend. When you encounter this formation, it signals that forex traders are still deciding where to take the pen next. Wedge can either serve as continuation or reversal pattern, rising wedge. A rising wedge is formed when the price consolidates between an upward slopey support and resistance line. Here, the slope of the support is steeper than that of what? The resistance. With price consolidating, we know that the big splash is coming. So we can expect a breakout to either the top or the bottom. If the rising wedge forms after an uptrend, it's usually a bearish reversal pattern. You can hear that. If it forms after an uptrend like this, it's a bearish reversal. Market, when it breaks to the bottom side, it starts selling. On the other hand, if the rising wedge form in a downtrend, it's a continuation pattern to the downside, right there. Either way, the important thing is that when you spot this forex trading chart pattern, you should get set with your entry order. So a rising wedge in an uptrend is a reversal to the downside. Are you saying that?
Yes, sir.
Then a rising wedge in a downtrend is what? Continuation, right?
Yeah.
To the downside. Now, simply put, whenever you see a rising wedge, what are you set to do?
Rising wedge.
Yes, whether a rising wedge in a downtrend or a rising wedge in an uptrend, whenever you see it, what are you set to do?
I have to wait for a breakout.
Yeah. Then before you do what?
Before I will execute.
What trade are you executing? Sell or buy?
Depending on where the market broke out from.
No. It's a simple principle. A rising wedge in a downtrend is a continuation to the downside. Market is going to continue coming down. While a rising wedge in an uptrend is a reversal to the downside. One thing is sure, when you see a rising wedge, what are you said to do?
Okay. In a rising wedge in an uptrend, I should wait for. I should be looking for sales.
Reversal, yes. Then what about rising wedge in a downtrend?
I should be looking for buys.
No.
Okay, rising wedge in a. Okay, yes, okay. I must. Once I see a rising wedge, it should always be sell.
Thank you. So it's a bearish signal.
Rising wedge.
It's a bearish short pattern.
Okay.
So you can see there, says simply put, a rising wedge leads towards a downtrend, which means that it is a bearish short pattern. So whenever you see a rising wedge, get set to do what? To sell.
Sell.
When it breaks out, you must break out first before you look at sell, right?
Okay.
Then we also have falling wedge. A falling wedge in a downtrend is what? Continuation coming down or reversal up?
Reversal up.
Correct. Reversal to the upside. Because this one is falling now, not rising. So reversal up. What about a falling wedge in an uptrend? Continuation up or reversal down?
Continuation up.
Okay, good. Same thing right there. Continuation to the upside right there.
Falling. Rising.
So did you get that, Nata?
Yes, sir.
So a rising wedge is a bearish short pattern. A falling wedge is a what? A bullish short pattern.
A bullish short pattern. Rising wedge.
What short pattern is this one?
So
what short pattern is this one?
this is a falling wedge.
In a way.
It's a bullish.
Okay, bullish.
In a bullish chart pattern.
Bullish trend. Okay, that's a bullish continuation. Right there. What chart pattern is this one?
Falling. This is a rising wedge.
In a what?
In a downtrend.
So what is it?
Is a bearish chart pattern.
Bearish. Continuation to the downside. That's bearish. Okay.
Yes.
So you can see that now. So that's a bullish, that's a falling wedge, this is a rising wedge. So as easy as that. So you can identify wedge pattern through these means, and get in on a trade with these patterns right there. Similar to a rectangle, pennants are continuation short pattern formed after strong moves. After a big upward or downward move, buyers or sellers usually pause to gather their breath before they take the pair further in the same direction. Because of this, the price usually consolidates and forms a tiny symmetrical triangle, which is called a pennant, because buyers are gathering their breath or they are resting their breath. So the market starts consolidating and form a triangle shape. While the price is still consolidating, more buyers or sellers usually decide to jump in on the trade, forcing the price to bust out of the strong move. And then market start trending again. Bearish pennant. A bearish pennant is formed during a sharp drop in price. After the sharp drop in price, some sellers close their position, while some other sellers decide to join. As soon as enough sellers enter the market busts the bottom of the pennant and continue to shoot down. So a pennant is a continuation pattern. It's a small triangle that is formed, and then the market continue dropping down to the downside. Now take note. Unlike other chart patterns that we have discussed earlier, the size of the next move when it breaks out from the pennant is approximately the height of the formation. Pennant signals stronger move. So usually the height of the earlier move, also known as the mast, is used to estimate the size of the breakout. So the distance of this height all the way down is what it's going to do when it breaks out. So signal produce Pennant produce a more pips, more pips than every other chart pattern. Once you see a Pennant pattern, it's produce more pips than any other pattern. You wanted to ask a question?
Yeah. Okay. Pennant is a continuation of a trend.
Yeah, continuation. After the market is selling, the market pause for a while, consolidated, form a small triangle, and then continue.
Just selling.
Yes.
Cannot see it on buys.
We have bullish Pennant also, so you can buy.
Okay. This one is bearish Pennant.
This one is bullish right now. This is bullish. It breaks to the upside and continue buying. While we have what? Bearish. Bearish also continue selling.
Okay.
We have one here. So you can see look at the highs, creating lower highs, right? Lower highs at the top, mark it out right there. Lower highs at the bottom, higher lows at the bottom, right? Mark it out,
yes,
higher low. Do you see that the market breaks out?
Yes.
And continue to shoot up. So that's what we call a Pennant pattern right there. Obviously, a Pennant pattern. There's one currently right now in gold. If you go to the 1 hour, okay, so you can see that now. Look at that. That's a small triangle. Are you seeing that now?
Yes, sir.
So that's the small triangle. After the sharp drop in price, don't forget, buyers and the market start consolidating. As soon as more sellers entered, the market burst through the Pennant and continued to drop. Now, don't forget, they said what? The distance of the Pennant from the height all the way down here is what the market will do when it breaks out to the downside. Use that to measure your profit target. So most likely, we could see price dropping all the way down here.
Okay.
So Pennant produced a more stronger confirmation that the market. I use Pennant a lot. I trade with Pennant a lot. In fact, how the market is right now is a sell confirmation. Look at that level right there. That was acting as a supply before, right? A support level. It has broken that support. Yes. It has also broken. Now this is a complete break. So anybody buying from here right now is a risky thing, because that's a complete break of structure, change of character already. Look at all this level that was holding. Look at all this level. Market has now finally broken below it. So that's a sell coming already, and potentially the sell may probably drop all the way down to this level first, or maybe even lower. You never can tell. But a sell is coming from what we are looking at right now. Except the next candle goes back up and close above this bearish candle before we can say, oh, that's a fake out. Are you getting me?
Yes, sir.
If it does that, we call that a fake out. And that means gold has been doing that rubbish all over and over again. People are going to lose money if it does that, because some people will be looking for sales now. I'm telling you. Even me, I'm probably after this live stream now, I'm probably going to join this meeting with you. I'm probably going to enter a sell, look for a way to go in on a sell. Now, if it goes above this candlestick high, that's a fake out, because it's going to continue buying. It's going to come for this fair value gap up here. If it goes above that, that's the only limitation right now. That is, if it goes above that guy, that means it's going to come for this low high right there. Maybe from there, we'll come down again, and then we'll continue trending up. Nothing. If it goes up here, I'm not seeing it coming all the way back down here again. It's just going to do a deep down, and then we continue going up again to the upside. But if it...
So I want to ask something.
Yeah, go ahead.
How do I get a confirmation from this sell now that is not going to break that candle that broke that Pennant?
Well, this is trading the break. That's what you're seeing right on the screen right now.
Yes.
What you are seeing right now is trading the break. It has not retested it, right, on a 1 hour time frame. So maybe when you see a retest and the market start pulling back down, you can be on a better side to join the sell. But now it's trying to go back to retest. I think that's what it's trying to do. So once you get in on the retest and you see that it's not going inside, it's not going, then you can join the sell. It's rejecting, thank you. Then you can join the sell. But if it's not rejecting and it's still pumping up, no need to enter the sell. Just wait. Maybe it's going to close back up again, and then we go again to the upside. Then that means we are coming all the way to this gap. But until then, yes, it's possible that the market can still sell from here. And it's bearish right now because it has taken out this low, this level right here that was holding the price. It took it out with this bearish candle. So if it goes back up again, that manipulation is very high. If it goes back up again, that's ridiculous, because that's a sweep of tend to be liquidity, right? And then maybe go back up again. So that's possible also, because every liquidity is literally manipulated, kind of is being seen as manipulated move to take people out, to take traders that are already taking a buyout from that zone right there. So that's just how it is. Any questions to this, sir?
Okay, I want to confirm something. The Pennant is just a continuation of a trend.
Yes, a continuation pattern. That's a Pennant.
Okay.
It's a continuation pattern.
Pennant. Okay, sir.
Buying just any candlestick you see. You see a bullish candle from not a support area, from somewhere that's not a support area, and you go ahead and take a buy. You see a bearish candle from somewhere that's a resistance area, and you go ahead and not a resistance area, and you take a sell. So now you have a better chance of entering a buy, of getting a better trade when you combine support and resistance with candlestick. So do you get that, sir?
Yes, I do.
Number two, your imagination is too strong. If you have to zoom in 500 times or squint at the Japanese candlestick chart because you think you are seeing something, there is probably nothing there. You don't have to try to assign a textbook label of candlestick formation you see. Focus on evidence or finding evidence of strong buying pressure when you are expected to buy, and evidence of strong selling pressure when you are expected to sell. Do you understand that, sir?
Yes, I do.
Good. 3, your imagination is too weak. A Japanese candlestick that is supposed to form after 3 candlesticks based on textbook example may actually end up forming over 5 candlesticks. Just because it takes 3 candlesticks pattern, just because a 3 candlestick pattern takes 4 candlesticks to form, it doesn't invalidate the pattern. The meaning is still the same. It is more important to understand the price action behind the candlestick than simply memorizing how it looks like. Now I'm going to take you to gold trade. I'm going to go to like 30 minutes time frame. Assume this is a bearish candle.
Okay.
This is a spinning top, right? We are using money star now for an example. This is a bearish candle. This is a spinning top. The next candlestick after that candle is what? Another spinning top. The next candlestick after that candle is what? A doji candle. A doji candle. The next candle after that doji candle is what? A bullish candle that closes more than half the body of the first candle. This 5 candlestick pattern is also a morning star candle.
Oh, okay.
Are you getting that, sir?
Yes.
So that's what they mean by it can take. We can also have a 5 candlestick pattern forming in where a 3 candlestick pattern is supposed to form. The meaning is still the same. It is more important to understand the price action behind the candlestick formation than simply memorizing its standard form, how it looks like. It's not to memorize, oh, it's theory, it needs to be theory. No. The price action behind the candlestick is extremely important, because that was what we were doing just now, right? A bearish candle, a spinning top, indecision, right? Indecision again, that's 3 indecision in a row. And then we have what? A bullish candle that closes more than half the body of the first candle. So what do we have there? Decision.
Yes.
So we now have a decision after the indecisions and then decision.
Okay.
So that's what I'm trying to say. So not because you see it forms, oh no, that one is not a morning star or evening star again. No, it's still a morning star and it's still an evening star candle.
Okay, but we can actually trade it when it forms mostly around the support area, right?
Everything. See, every candlestick pattern that you want to use must be around the support or resistance area. Most compulsory. Number 4, you forget the forex from the tree. This one, a lot of people do this a lot. If you constantly just focus on shorter time frame, like 5 minutes chart, without stepping back to look at the bigger picture, your trade will what? Your trade will get blindsided. Try not to make your focus too narrow. So every time you go to the 5 minutes, you want to trade, you look at the 5 minutes. 5 minutes is your best friend. You are not even bothered about what happened yesterday, daily candle. You are not even bothered about what happened in the last 4 hours or probably the last 8 hours. All you care about is just the 5 minutes movement you want to take, and you can hit stop loss back to back on 5 minutes. Why people who are trading on the 1 hour and the 4 hour time frame have not even entered trade today?
Sure.
They've not even entered trade today, but you've hit stop loss how many times already today? So try not to make your focus too narrow. Do you get that, sir?
Yes.
So what I'm trying to say is that always look at the bigger picture before you look at the smaller picture. Don't just jump straight away and then you enter the smaller picture. It doesn't work that way. Except you have already looked at the bigger picture, then you stick to the smaller picture in the entire day, because at the end of the day, it's that smaller picture that will create what may happen in the bigger picture. Do you understand what I just said? It is that smaller picture that will create the market structure that will happen in the bigger picture. It's the smaller time frame candles that will create petals, smaller candles that will not lead to what? That will lead to change of character, that will lead to bearish engulfing in the 4 hours. Because when it's creating bearish engulfing in the 4 hours, for example, in the 5 minutes, it's creating a change of character. Right? It's creating a change of character in the 5 minutes, but it's creating a bearish engulfing in 4 hours. So it's the smaller candles that will give you, that will create that bearish engulfing in the 4 hours. It is that bearish engulfing in the 4 hours that will create the change of character in the smaller time frame. So, in as much as the smaller time frame is important for you to also look at, because it's a quicker movement, the bigger time frame is also very much important because of huge supplies and demand. Are you getting me? Because of huge supply and demand, because that's the main important thing. If the 4 hours price is in a supply area, that means there's a better chance that your 5 minutes that you are going to buy at, you may not break that support, break that resistance. You don't know now that there's a resistance level in 4 hours because you focused on where? You focused on 5 minutes. That's what you focus on. And you are not seeing a resistance level at the 4 hours, right? Never. Because you can only see it on at the 5 minutes, I mean. You can only see it at the 4 hours, not on the 5 minutes. So you don't even check the 4 hours at all. You ran straight away and look at the 5 minutes time frame, and then you started buying. Once you started buying, you enter a trade, you buy, the price started going up. The price started going up. And then stopped, and then reverse. You will now be thinking that you are still going to make more money. Right? It's still going to go up. Knowing that where it's reversing from is a 4 hours resistance zone. Are you getting me, sir? It's reversing from a 4 hours supply level. But you now, you are not aware of that because your attention is focused on where?
5 minutes.
Thank you. 5 minutes. And then when the market stopped you out, you started shouting, oh, manipulation, they've manipulated me. This market has manipulated. Trump has tweeted. You know, you started bringing all sorts of news for to help yourself from not seeing yourself as a failure, but you want to blame it on the market. The market is the one that made you to fail and not yourself.
Okay.
Number 5, you don't wait for confirmation. You see this part of Forex trading, is the part of Forex trading that everyone has passed through it, and some people are still passing through it now.
Likewise.
Okay, likewise.
You know, sometimes emotion when it kicks in, when you have some, especially when you have some kind of bills you want to pay.
Yeah.
Emotions like turn in.
Yeah. There are some candlestick patterns that are considered self-confirming, but many are not. Bullish engulfing candle and bearish engulfing candle are considered self-confirming. morning and evening star candle are confirmation candle on their own. I think those two candlestick pattern, 3 inside up and down candle, are confirmation on their own. So basically, you see that 2 candlestick pattern and triple candlestick pattern, they are self-confining candles on their own.
These 3 confirming candle, sometimes it's kind of confusing sometimes, because I think it works mostly on 15 minutes time frame, if I'm right.
Any candle that did not work in 4 hours will not work in 15 minutes. So
okay, it works in 4 hours.
Oh yes.
But by the time you use it in 4 hours, your stop loss will be very, very
that's it now. That's it. The thing is, because we are all trading gold. We all like gold so much. If not, if you are using this candlestick pattern on a smaller time frame, then we would have been on a smaller currency, on those currency pairs, you would have been making some money, but because we always feel like gold is, that's why we're always cutting down to the smaller time frame on gold to trade it, because gold is quicker movement, faster movement. Currency pair on currency pair, GP card trade, that's when I entered for a buy. And the market started going up, started buying. I was happy. I was making money everywhere was blue. All of a sudden, the guy started turning around. I was like, what's going on? Just few pips to the fair value gap, it started turning around. So I quickly cut off my profit that I've made. At least it has given me almost 70 pips. So then it turned around to about 30 pips minus. So I cut off with 40 pips profit. I cut off because you are already getting to your destination. Why did you not turn around again? You are going to 100 pips. I calculated 100 pips. It was already in 70 pips. And then it started turning around from 70 pips. And then the moment it cut back to 30 pips, cut off 30 pips, I closed my profit. I took my profit from 40 pips. Do you know that I did not regretted it? Because when I came back and look at that GP card again, the rest is history. It dropped all the way down. Like it would have taken me out. I want to show you. Don't worry, I'm here. I want to show you. Let's see the 4 hours time frame. There is it. So this was where I bought from. Literally, there is a trend line from this high all the way down here.
Okay.
So you can see that I took a buy from this level right here. You see this level? That's where I took a buy from before this one was created. When I took a buy from here, first of all, the price is also reacting from this fair value gap right here at the 78% Fibonacci retracement. So the price reacted from that fair value gap right there at the 78% Fibonacci retracement and started going up right there. What happened? The market started dropping down again. Now, I entered the buy. When I entered the buy, this guy started going up. I have my stop, I have my take profit around this fair value gap right here.
Okay.
Look at what happened. And then it started dropping down. I quickly cut off. And my stop loss was just around this bottom. Imagine how I would have waited. And then, look and see, it went below my stop loss. And then, even below, and then started buying up again. When it did this, I removed my attention from the market. When it did that, I said, no, I'm not. Look at, because it's not the first time it's approaching the 78%. It's the second time. This is the first time right there. The first time, sorry, right there. It goes up. It comes down the second time. It goes up. I was like, there's nothing that will make this price to come back in again. After all, there's a liquidity, trend line liquidity right here that the market can just go and sweep, sweep all of them to the upside right there. And that's not what it did. It was going up. All of a sudden, it turned around, and I was like, no way. And do you know how long I waited? When I entered the buy right here, I waited 1, 2, 3, close to a whole day for the market to give me just 70 pips. To move 70 pips.
That's why people rush to gold.
Thank you very much. I waited the whole day for 70 pips, and I could not see the 70 pips. I was only able to get 40 pips.
Imagine.
That's how terrible that currency pair can be.
Something can get in 5 minutes in gold.
You say?
Something can get in 5 minutes in gold.
In 5 minutes, I can even get sometimes 100 pips, sometimes 200. Gold is crazy. In 5 minutes, sometimes it can run how many pips? Very 2 long candles, 3 long candles. I was giving you how many pips just now.
Sure.
So that is one reason why people rush to gold for confirmation, for better trade entry. And that is why we are always not waiting for confirmation. Because the confirmation in gold is you have to be so sure so that you don't have So, and when you are so sure, you will now have over confirmation. Are you getting me, sir? When you are so sure,
Yes.
you will now have over confirmation. And that is now when you are not scared to enter. Because when it over confirms, it now brings a long candle, right? And then when it gives you that big candle, you are now scared to enter the trade. Are you getting me, sir?
Yes, of course.
Okay. Make sure to wait until the candlestick close and fully formed before acting on the candlestick pattern. Make sure to wait. Not that the candlestick is still open. Oh, let me enter the trade. Let me jump into the trade. Jumper. Wait for the candlestick to form before you act on the candlestick pattern. It shouldn't be currently going on and then you jump into the trade. No, because it can turn around before your eyes. 2 minutes for the candlestick to close, it can turn around to something else. Always wait for the right confirmation that the market, that the price is moving in the direction you are expecting. For example, it is if you see a tweezer bottom, it is more prudent to wait and make sure that the candlestick close after the tweezer bottom higher before you are going to take a buy, because tweezer bottom is not a self-confirmation candle. So wait for the price to do what? To close higher before you go ahead and buy. So do you understand all of this, sir?
Yes, I do.
Summary of Japanese candlestick pattern. So we talked about single candlestick patterns, spinning tops, dojis, marubozus, inverted hammer, hanging man, shooting star, two candlestick pattern, bullish and bearish engulfing, tweezer top, tweezer bottom, morning and evening star, 3 black crowds and 3 white soldiers, 3 inside up and down candlestick. So these are what we talked about right there.